Hey traders, Raghee here, and some of you might recall that in a previous free video that we did recapping a day last week, I talked about the importance of market structure, and it really played a huge role in today's movement. I want to show you why it's so important, how to use it, and what it tells you about the kind of bias that you should have day to day. Now, as a trader, I really want to hit the reset button on my opinion, my bias, in a small way every day. In other words, what did the day's price action, were there any thresholds that were broken? Were there any retracements that were made? Did it make any structural changes to the underlying organization of the market or the market trend? And ultimately, most days don't, right? It's usually the accumulation of a number of days, right? You have 4, 5, 6, 10, 12 days doing something in particular, volatile, trending, whatnot, and it could change the structure of the market. So looking at the Dow, we started off the day in the chat room, and these are the things that I'll do in the pre-market chat. So we kicked this off about 8 a.m. Eastern, a good 90 minutes before the markets open. Although the futures markets are moving, equities are, you can see some pre-market gyrations, currencies are moving, so we have a good idea of some of the main markets and what that could say about the 9:30 bell ringing. So first of all, the underlying market structure is what? And this is kind of hard for some traders to believe, but we were sitting at an oversold, dare I even call it a buy zone. Now I call it a buy zone because this is support. All this in here is support, which means we could see the market attract at some point, the deeper we get into the support, and the closer we got to 24,000 was a big deal, that all of a sudden those pending orders, limit orders to buy stops, all that stuff gets triggered and triggers some bullish momentum. And it's tough to want to say on a day where the market's selling off 500 plus points that, hey, let's buy into a 500 point sell-off day. But remember, the points that were up or down aren't really the point. It's where has that sell-off taken us? It could have been a 200 point sell-off that took us to 24,000. It could have been a 700 point sell-off that took us to 24,000. But the fact that we have 3 different Darvis levels saying that, hey, we could have support in this area, that's what's more important. So the sell-off gets us here, kind of triggers the interest, if you will, at those support levels. And because this is still a distribution market trend, we bounce. Would I call this a technical bounce? Look, it depends on what your primary mode of analyzing the market is. If you're kind of a news, fundamental, event-driven trader, you'll say the market overreacted to the delay of the Brexit vote. If you're a technical trader, one of your indicators might have signaled it was oversold. If you're a price-based sort of support and resistance trader, you'll say, hey, we traded into a trio of support levels and hit a major psychological level at 24,000, right? But all these things basically converged. They all came together, and you can see what happened. What did we want to do? What did we talk about in the chat room? All 3 of these zones became areas, especially the 24,000 major psychological level, that we could price call options. Call options in the Dow, call options in the DIA, call options in the S&P, and call options in the SPY. So that support level at 2,600 in the S&P, 24,000 in the Dow was exactly where we start sinking into oversold support. I will never call a downtrend oversold support, right? We could say even the NASDAQ arguably was sinking into oversold support, but you know what market we would not say? That would be the Russell. Russell actually is an intact downtrend. It is not distribution. It is not chop. It is lower lows and lower highs organized with just a massive number of red grab candles and only a small number of blue grab candles that are neutral. Very small number of these neutral blue. So this is an intact downtrend in the perspective of this structure that I talk about, these market trends. So you won't hear me refer to something as being oversold here because it really isn't applicable unless the market's chopping. We want to find retracements and bounces, right? So think about the underlying structure of a lot of the charts you're looking at, whether it be currency, stocks, futures, whatever, ETFs. Think about the underlying structure and what that says about the bias on any given day. Today, we were definitely looking at a chance for a bounce. That's exactly what we talked about early this morning. That's exactly what we got. Again, the reasons for that, they vary, but the fact that we're once again in a zone that we've seen support at before, it's amazing how reasons come after the price action. And I'll see you in the next update.